Welcome to all our attendees for joining us. This is DFI's webinar discussing central bank digital currency, particularly with a focus on Africa, but also we will be talking about Asia and developing countries as well as today's session goes on. So just to introduce myself briefly, my name is Sarah Corley. I'm Deputy Director at Digital Frontiers Institute, and it's one of my responsibilities is to run the webinar series. So I'm absolutely delighted to be with you all again for today's session. And I'm really happy to be joined today by two experts in the world of central bank digital currency. So introducing first, we've got Monica. Monica Singer is the first CEO of South Africa's Central Securities Depository, Straight Limited, which she set up in 1998. And then in 2017, she was appointed as the South African lead for Consensus, the biggest blockchain company in the world. So welcome, Monica, and thank you very much for joining us today.
Thank you.
And we also have a name who I think will be familiar to many of our calls, those on the call, Nolwazi Hlophe. Nolwazi is Deputy Director at Digital Frontiers Institute, and she is an experienced financial regulation and supervision specialist. Hi, Nolwazi.
Hello, everyone, and I'm happy to see so many familiar names. And thank you for joining us today. Thanks, Sarah.
Perfect. So just a couple of housekeeping things before we kick off. Just to remind you, the session is being recorded and we will be sharing the recording with you either tomorrow or the day after. And A, it will be there for you to act as a resource, but B, more importantly, if you enjoy today's session, which I'm pretty sure you're going to, that you can then share that recording with your colleagues and friends and your peer network as well. I always feel the more people that see the webinars, the better. And also, we really want to hear your questions. So we've left time at the end of today's session to hear directly from you. So if you've got questions, please do pop them in the Q&A function so that we can get around to seeing them all and answering as many as we can before the end of the session. So I think without further ado, let's get going. We're going to start off by trying to give you a little bit of a picture and a journey. So Monica's going to kick off and talk a little bit about sort of the evolution of money. You know, how did we end up from where we were, you know, with just paper several years ago to now this whole new world of digital money and even newer central bank digital currency. And then Nolwazi is going to sort of try and help set the scene for some of the legal and regulatory gaps towards CBDC implementation, particularly Africa, but also there will be things that touch Asia and South America and other developing countries too. We'll then explore a little bit more some of the implications, in particular around you know, how do we get started with central bank digital currency before looking at what it might mean for the consumer financial services providers as well. So hopefully that gives you a little sort of tour through what we're going to cover today. So Monica, I'm going to start sharing our presentation and over to you.
Thank you, and welcome everybody. It's my real pleasure to be here, and I've got really 5 minutes to give you a long story, so I have to be very short. So in the first slide, I start with the evolution of money and how did we get here? Because the truth be told is that we are living at a time when money is being reimagined. And that, I think, is a great and huge responsibility for all of us in this space, not only as like myself working in blockchain, but many of you that are regulators working in central banks and other financial institutions. As you might remember, it really was, I don't want to start from the very beginning, but I want to start really a very important moment in history when in the 70s, Nixon said that the money that was being issued in America, the dollar, was not be backed by gold any longer. So at that point in time, it really was the concept of in God we trust. The money was based on the fact that you had to trust the central banks. Also, as you know, we have the concept that cash is issued by the central banks, but actual money, the money that we all have, mostly because we don't pay in cash, we pay, you know, with money that gets issued by a commercial bank, that is issued by a commercial bank, and therefore the people that have got loans with a commercial bank or you deposit your cash with a commercial bank, you have what is called in this industry counterparty risk. The counterparty risk is very problematic in developing countries. Why? Because there are no I don't think there are any developing countries that have got deposit insurance. That means if the bank that issued this money goes under and you have your deposit with the bank, the money disappears. And I'm sorry for you, that's your counterparty risk. Then we had in 2008 this terrible crisis in the world, and then a group of people that we don't know who he, she, or they are, created what is called the Bitcoin white paper, where it launches to the world an idea that is really the genesis of everything we're discussing today. And that's how Bitcoin gets created, which is a cryptocurrency. This cryptocurrency is completely different. It's really issued in a ledger that is immutable, but it's all shared by everybody. Everybody can see the same record. There's no silos, there's no reconciliations. It doesn't use mainframes, it doesn't use Swift messages, it doesn't use RTGS systems, it uses the internet. It's peer-to-peer, it's digital, it's fast, it's cheaper. There are no real bank charges, you don't need a bank account, and therefore it totally will change the way that we behave. And then in 2014, a new platform was created. It's called Ethereum. And Ethereum has got what is called smart contracts, which increases the ability for this currency and platform to be used in many more applications in business. So that is the creation of cryptocurrencies. But the big problem with cryptocurrencies, because after those two, there were many, there are thousands of crypto currencies, different uses, different privacies, different platforms. And all of that really is backed by nothing, just simply is backed by the sentiment of the users. But the problem with these currencies is that they fluctuate in value. So as we know, money has got to meet three definitions. It has to be a store of value, it has to be a unit of account, and it has to be a medium of exchange. So therefore, we know that cryptocurrencies are not good for unit of account or medium of exchange, but it's very good for store of value. We have seen great wealth being created by those people that bought cryptocurrencies, especially at the beginning. But it's not good as a medium of exchange. So then something new came to the market, which is called stablecoins. What's a stablecoin? It's like a cryptocurrency. The difference is that it's backed by something. It's collateralized. So you have four types of collaterals. You have the ones that are collateralized by fiat currencies. Fiat is the currency issued by a central bank. So you have, for example, USDC backed by dollars. Then you have those backed by gold or diamonds or silver or oil or electricity. So those are backed by natural assets. Then you have other currencies backed by cryptocurrencies. And then you have one that is crazy for me because it's backed by an algorithm, and we have seen that stablecoin fail in terms of maintaining the stability of the price. And then finally, some years ago, the talk came to the world that Facebook, who has 2.3 billion users in the world, was going to issue their own stablecoin. Remember, stablecoins are a liability on the issuer of the coin. So that means that Facebook was going to issue their own coin that they're going to release into the users in the world. And that's when the central banks in the world realized that they better do something about this, because imagine that at least 2.3 billion people in the world stop using the fiat currency. And that means that slowly but surely, the ability of a central bank to set monetary policy will reduce and get eroded. And therefore, it had a massive impact on the world. And the central banks, for the first time, started realizing they had to start researching this new type of money that they were now obliged to consider to issue. The massive difference of central bank digital currencies is, for the first time in the history, central banks are going to issue this money that is digital, that is programmable, that is their liability. It's a liability on the bank, on the central bank's books, directly into the population. Never before, the only liability that the central bank has done has been every time they issue coins and notes, but the money, as I said, is not their liability. But now if they're going to compete with the stable coins that are privately issued money, they're going to have that liability into their books. The big question that they have to ask is, they have many questions, and that's what we're covering today. And I will answer some of the questions that central banks need to ask themselves as to what problems are they planning to resolve. So, and then finally, the other thing that surprised the world completely was when China, the Central Bank of China, releases their retail central bank digital currency, and it's already in production in many cities, in many applications. And the risk is that the rest of the world has been caught, I would say, napping, because they were in denial that this was going to be something that would be needed in the world. And now everybody's like trying to catch up to China. So something that we were all worried about, the privately issued stablecoin by Facebook, now we're all worried about the dominance of the central bank digital currency in China. In my next slide, what I cover here that I need you to understand is that there's three types of central bank digital currencies, the main three types. One is the wholesale, and wholesale is really the replacement of the RTGS, the real-time gross settlement system. As you know, every night the central bank settles interbank via mainframes, Swift messages, and collateral, overnight batch processing, and the wholesale CBDC will replace that process. This is totally different to the retail CBDC. Retail CBDC is to replace cash, and therefore make it more accessible to every single citizen in the world. They will need their own wallet, they will need to be educated, and this is a massive opportunity, especially for developing countries, to finally once and for all resolve the terrible thing that we did when we created the banking system, which is to leave out of the banking system 1.7 billion people in the world have no bank accounts, or they hardly use the bank accounts. And now, for the first time ever, we have a chance to change that paradigm completely. And therefore, imagine, not only are you going to be able, as a central bank, ensure that your ability to influence monetary policy continues, but you are now going to reach people that you left out. So, and then the final one, which is also, I call it a crime against humanity, is the fact that the system of transferring money from one country to another is so expensive that I can tell you that I live in South Africa, but I'm originally from Uruguay. When I send money to my family in Uruguay, it takes longer than if I got into a plane and I took it myself, and then the money arrives, and then the charges are at least 20% less of the money that I sent. And that is unacceptable. And I can tell you stories in South Africa, how the remittances take place, that people give cash to a taxi driver in South Africa to take to Zimbabwe, cash in a taxi. Sometimes the money doesn't arrive. So all of that cross-border has to be resolved. And imagine that now we have the chance to do it in the internet, real time, electronically. The money will go to the person that it has to go. So all of this terrible problems that were created previously can now get resolved through the implementation of the central bank digital currency. And that's why you can see I am totally in favor that central banks, especially in developing countries, should not even hesitate and should actually implement it. And they don't have to follow whatever the rest of the world is doing. Each country will have their own pain points, and each country will have to resolve how they're going to do it. My only comment is, whatever platform you use, don't get stuck in a platform that is not interoperating with other platforms, because the worst thing that could happen is that you create a central bank digital currency that doesn't interoperate. You want to be part of the rest of the internet, the rest of the world, open the economy, make sure that you have the ability for this CBDC to interoperate with other CBDCs and other digital coins. There's going to be many currencies, many cryptos, many stable coins. I can assure you, I work for the biggest blockchain company in the world. We are working with many credit card companies, and they all know that the credit card will go like the horse. Nobody will use credit cards in the future, and therefore they will have to have their own stable coin. Okay, I'm going to stop here, and Nolwazi, all yours. Thank you.
Thank you, Monica. So I'll be touching on some of the key legal and regulatory gaps towards CBDC. I want to say implementation. I put implementation there, but maybe towards the journey towards CBDC, maybe POC, then starting to implement complementarily with cash, because you can't just cut cash out of the system. I see your hand, Mustafa, and we'll be taking questions after I finish my presentation. So maybe in the meantime, you can put your question in the Q&A, and then Sarah will be taking up all the questions there. So please move on to my next slide, Sarah. So when you take a look, so Monica took us through the journey of money and where we are now with CBDC, touching on the technological aspect. And now I'm looking at the legal and regulatory infrastructure that may impact the pace of CBDC and the process up to POC and eventual rollout. And what laws need to be in place or may need some adjustment, and how they impact the process. And you'll see that not all of the laws fall under the jurisdiction of a central bank. Yes, the first one, which is the Central Bank or Reserve Bank Act, which establishes the central bank or the Reserve Bank, is definitely the first one you want to consider, because it gives the definition of what legal tender is. And that is where you can see whether a CBDC is legal tender or not. So if that definition of legal tender doesn't cover a CBDC, then first step is seeing how you can amend that through, or if the Central Bank or Reserve Bank Act allows discretion to maybe write a regulation to amend that, or whether the act itself needs to be amended through Parliament to allow for a CBDC to be included in the definition of legal tender. Then you go and you look at your KYC, AML, and CFT laws. So those are sometimes joint laws with the FIU, working with the central bank. And so there you see another stakeholder coming into play. Maybe the central bank or the Reserve Bank can change, can update their regulations, or they need to work with the FIU, because a CBDC doesn't just affect the central bank. This is talking about how people pay for everything in the whole country. So it goes back to now touching on things about stakeholder collaboration. And then the big one, data privacy and protection. Countries in Africa are either drafting or have their data privacy and protection laws as a bill before Parliament, or they have them approved and haven't enacted them yet, or some of them have them enforced. You'll see in my next slide where I show you a map. And so the data privacy discussion is really critical, because it even touches on consumer trust and how far you can go, because with the CBDC comes a level of data that you'll have access of the individual. And it also again touches on whose jurisdiction does writing the data privacy and protection law fall on. It's not the central bank, it's another regulator, which again brings in more collaboration. In some countries, that's the telecommunication regulator's jurisdiction. Again, even the cybersecurity laws, that sometimes is the telecommunications regulator's jurisdiction. So you can already see that the legal and regulatory infrastructure, setting that up or making it work for CBDC is a highly collaborative journey, not only inter-regulatory, but even intra-regulatory, because within the central bank or Reserve Bank, you need to coordinate not only as the department that's in charge of heading the CBDC project, if per se the fintech department, as the fintech department, you need to work with the financial regulation department, because they need to work with you towards drafting the laws that will govern how all of this works. how much privacy is given, how balancing that thin line. As I said, I'll be talking about how this will be governed. Will it be a centralized or decentralized? How will we control for financial stability risks? How will we control for avoid trying to, are we going to issue the CBDC through the banks? How are we going to avoid disintermediating the banks? So, and also working with the other departments within the central bank, your financial inclusion, as Monica mentioned, because then everyone is included. But how can you now reach the people to educate them, not only financial literacy, but digital literacy, because as again, see central bank digital currency. So there's a lot of coordination that needs to be involved, as well as inter-stakeholder collaboration that needs to be involved, apart from considering the laws. I mean, I've included a few, but these are not all of them. There are some that need to be considered that I may have left out. So we can, Sarah, please move to the next slide. So in my last slide, I touch on a very a bit of a loaded discussion. I remember we had this when I was in a digital meetup that Senfree had hosted around the fine line between data protection and privacy and transparency, and how that could be addressed or controlled within the scope of a CBDC. Because once a CBDC, that would be, it would depend on the design choices that are made in the development of a CBDC. From my figure of Africa on the, well, my left, you can see that more than 80 African countries have some form of data law that is either enacted or enforced. That's as of 2020 though, that's my caveat. And so a lot of some African countries are still working on it. Like there it says, for Gray, it says no data protection law, but I can personally say, as I am from Eswatini myself, that for us, our data protection bill is before Parliament. So, but that's now 2021. Some countries probably have that same state currently, but this is data as of 2020 September. So data protection and privacy laws are key to striking that fine balance. Because with the CBDC, it depends on whether you want to then know in your design choices, know where each coin is with who, how it moves and so on, because then you can fully monitor. And this comes with the advantage of if now you want to make sure you fight AML, CFT hard, but that's not a core mandate of the central bank. The core mandates generally of central banks are price and financial stability. Reducing illegal activity, yes, it would be a plus. But some regulators, I remember a gentleman from Rwanda was speaking so strongly about this, because he touched on something that Monica was speaking about on the big techs that are now coming into finance, that they have so much data on the consumers and they don't have to be trying to be playing this balancing act. And it seems a bit unfair that countries or other governments have to, whereas they don't. But at the same time, the big techs don't have the same level of authority as the government. The big techs can't put someone in jail. And so it comes with a level of trust, because if the people cannot trust the CBDC and the private and ensure that they have their privacy intact, then they'll stick to cash, and it will defeat the purpose of wanting to ensure that everyone is financially included and the economy is moving to using more digital products and moving away from cash. And another thing Monica mentioned is that there's 3 types of CBDC: the wholesale, the retail, and the cross-border. And the cross-border, I feel, is something that we're still looking ahead to, because countries are mainly still researching on wholesale and retail. And when you think ahead now, even with data protection and privacy laws, as she said, you want to make sure that your technologies for your CBDCs are interoperable. But we also need to start thinking about cross-border data sharing arrangements. People are already struggling nationally to try balance that line around public privacy and CBDC design choices. How will that look even now with cross-border payments where cross-border data sharing may be needed? It's something that I think we need to think about as well. So that was my segment of the presentation. I think I'm seeing like 8 questions now in the Q&A. I doubt we'll need to go through any of the questions we had prepared at this rate, but back to you, Sarah.
Well, I think let's sort of deal with 1 or 2 of the questions that we'd originally planned, because I think they will then sort of feed nicely into some of the questions coming in. So I think, Monica, one of the things that I want to ask of you is, obviously you've been doing a lot of work with various central banks across the world, and you've been testing out this proof of concept of central bank digital currency. Can you just give us some highlights as, what is working, and what are some of the challenges that we can kind of get a better idea of where the different countries are with it?
Okay, so the most important thing is, this happened in the last 3 years. The evolution has been incredible. So when it started, if you haven't looked, most of the proof of concepts we've done is in the wholesale space. Why? Because wholesale is very safe. It only affects a few banks and the central bank. It doesn't touch anything else. It doesn't open up a can of worms like retail. It doesn't put the banks at risk, So everybody went for the safe one. But the safe one, it's irrelevant, I'm sorry to say, in a developing country. Why? Because the wholesale, it resolves the issue of delivery versus payment in the capital market. So it's a little bit, it's very sophisticated. It makes sure that the interbank settlement is real time and it's fast. But why would I spend any energy on something that is quite irrelevant for the people? If I just told you that our 2 biggest issues in financial markets are financial inclusion and cross-border, shouldn't you concentrate on the real issues? Well, very few have the courage to do that. So there are 2 beautiful examples of countries that with the weight have said, we need to resolve this. One was Cambodia. They are live with a retail CBDC, and the other one is Bermuda. As you know, Bermuda has many islands. They used to have to go into little boats to transfer the cash. When there's a storm, the cash doesn't get transferred. So they resolved that. But they went very conservative. I recommend you read the paper. It's very short. It's called the Sand Dollar Proposal, and you'll see that it resolves the issues applicable to Bermuda. The same as Cambodia, it resolves the issues applicable to them. Now we're working on a POC with the Bank of Thailand. Thailand also is big country, issues of, if you travel in Thailand, you don't hardly find any banks. So it's very hard to find a bank if you need cash, et cetera, et cetera. So the main thing is to concentrate on the real pain points that you have as a country. I've got a pyramid that I described. The pain points of a developed country are totally different to the ones of a developing country. So as a central bank in developing countries, concentrate on retail, concentrate on your personal pain points, and don't worry too much about, would I make the banks upset or politically incorrect? No, do what's right, and that is one of the things that we find in that only as time evolves, central banks are learning more about this technology and understanding the power to make a difference to their own citizens. So that's what we're learning. And then the other thing that we're learning is that central banks should 100% embrace blockchain, distributed ledger, programmability, because that is what you want. You want money, like in the digital dollar project, the Federal Reserve Bank said, we're not going to be the first ones, but we're going to be the best ones. What does it mean? they're taking time to think about how to put the digital dollar project into the very future. How would it embrace all the technologies that are now available to make sure that it integrates, that it becomes the dominant technology, blah, blah, blah. And that's what I want. I want that central banks in developing countries, they don't have to wait for anybody. They don't have to be in competition with anybody. This technology is available to anybody. And that, you know, for example, we offer technology that we can connect a central bank in a couple of weeks, and they can start practicing and learning and training their people, and it's very easy to use. And therefore, it changes completely the paradigm of what they've been doing until now. It's hard because I always say this technology is not for the baby boomers. This is for the millennials and younger, because the baby boomers, we are freaking out about this. You know, we don't want decentralization of anything. We don't want, you know, to give up the power to the people. We believe in, we are the controllers of the universe. This is rubbish, it's changing. The power must be given back to the people because this is the internet. So those are the lessons. The lessons is get over the fear, just do it. And it's very simple to implement once you are able, what we call going down the rabbit hole of this new paradigm. Okay, but this is really in a summary what we have learned, and that this waits for no one. And the changes are happening exponentially. There's no time to wait, because you know what's going to happen? For me, the fear is that if you do not implement this, people will either go into crypto or stable coins. And that's not what you want as a central bank. You still want to have some influence on monetary policy. And you won't have it, you know, if you do not get your act together. I'm sorry to say, it's the truth.
So I've got a follow-up question to that then, is, and Nolwazi as well, you chip in too. So is that one of the big fears, you know, that lack of, you know, the monetary policy issue? Is that why we might sort of be fearful of Facebook's, you know, currency, or even China's own central bank digital currency? You know, is that one of the key factors that, you know, central banks need to be thinking about?
Is it for me or for no one?
I think it's for both of us, but I can start. I think the reason why central banks have looked into CBDC is, okay, obviously looking from the start, Bitcoin, they saw the applications of blockchain and thought, okay, this is something we can look and learn from. But it was also the fear of losing monetary sovereignty, that if more and more people start taking up Bitcoin or these stable coins, well, yeah, cryptocurrencies and so on and so forth, that they'll lose monetary sovereignty, and therefore their monetary policy will not be as effective anymore. And so they thought, I think this is the rationale, that then if we also make our own digital currency that is as effective, but now offers more security because it's a liability, it's our liability to the person, then they will use it, as opposed to these cryptocurrencies that are so volatile that you don't know what price Bitcoin will be tomorrow. That is why we are here today. But at the same time, a lot of regulators are in a position where they want to jump on this journey, they want to go in, but they don't know where to start. There's so many factors that come in play. And some of them are afraid to ask because they don't want to look like they don't know, because there's a lot of capacity building that still needs to come in with a CBDC. Apart from the technical knowledge, it's the regulation, it's the soft skills that people often overlook, that you and I still want to do a podcast on, that stakeholder collaboration is not just saying, yes, we need Monica on the team, but we need to learn how Monica has been working, because Monica is part of the private sector. She's a technology provider. We need public sector to learn how to speak private sector, and private sector learn how to speak public sector. So there's a lot of factors at play here, but I think the key thing is that central bankers embarked on this journey out of fear of losing monetary sovereignty, and to make sure that they still stay relevant and have control over their monetary policy.
Anything to add, Monica?
No, I agree. We can go into all the other questions. There's so many good ones. I'm dying to answer.
Great. So I see a question that's come in from Combe, and also a couple of other people have said something similar. So Combe's question is, how can CBDC interoperate with cash, mobile money, payment platforms, obviously banking as well, for those of you who are banked. And we've got a couple of others who've asked questions about, can you paint the picture of what it would look like? I think Abigail asked that question. What does it look like for, like say, a shopkeeper or a bank or the consumer? How would this work in our real worlds? What would it look like? Monica, perhaps you can start with that one.
Okay, so first of all, I truly recommend that everybody attending this conference has to trade cryptocurrencies. I know some you're going to be horrified, but why? Because only when you have that experience of having bought Bitcoin or Ethereum using an app that you download, and you, with your little finger, you can buy, you can sell, you can transfer, you can do everything you want, and you didn't phone a bank, you didn't phone an intermediary, you didn't ask permission, you could be at 3 o'clock in the morning on a Sunday, very bored, you could be playing the market. That doesn't happen in the world. Why? Because banks have got working hours, because everything is costly and delayed and blah, blah, blah. So when you have the experience of buying and selling crypto, then something will magically happen to your brain that then you will realize that's what you could do with a CBDC. But the difference is that CBDCs, we're talking retail, will be a liability of the central bank. So that amount of money that you're playing with, it's backed by at least a central bank. No, the crypto, you don't know. It fluctuates. You don't really know what's going on there, and you always have this like concern: should I use it? Should I not use it? It's illegal. All these issues. But CBDCs is that what's going to happen? You're going to have an app, what we call an electronic wallet, and you'll be able to transact using your finger. And to the extent that even in South Africa, there's a company that has invented a device that you don't even need a smartphone. It's you just need biometrics. It's going to be installed in every single taxi. So you will load money into this website. And then by the time you drive the taxi, you walk in, you put your fingers, your fingers get recognized as your biometrics, and you pay for the taxi just by touching the device. The device gets kept by the taxi driver, and it doesn't require the internet. So even all these new technologies will be developed that won't even require the internet. So the main thing is the user experience is going to be so basic that you wouldn't even know that you're using CBDC or blockchain. The only thing you really will know is that this is your money, it's not in a bank that could fail, it's backed by the central bank, and hopefully central banks will build it so that that CBDC will interact seamless with any other coin. So you will have the app and you will be able to press buttons and say, okay, I'm going to swap my CBDC with a stable coin, with Facebook's DM, or with, let's say, some other CBDC in the world, without any concern, without phoning, without public holidays or working hours. So that's what the world is going to look like.
That's an amazing picture. It's kind of hard to get our heads around in some ways because of what we're used to on the usual constraints, right? That we're used to thinking is normal, but actually, if you take away those constraints that have been put there by legacy banking systems, the world can be a very exciting place. Yeah, and you didn't open a bank account. Remember, someone asked, how are you going to manage without opening a bank? You don't open a bank account to buy Bitcoin, no? The same for CBDCs and stable coins and anything. And remember, there are thousands of coins being created and more will be created. Every credit card company will have their own stable coin. Every bank is issuing their own stable coin. So you're going to have the choice of many, many coins. And that's why the most important thing is going to be, for me personally, is to educate everybody. Because Sarah, really, the main issue that for me, I'm a chartered accountant, for me, it breaks my heart to think
that only chartered accountants understand money, that's ridiculous. We should be teaching about money to every single kid in school and teaching them to look after their own finances, and not especially girls that are told, don't worry, your husband will look after you. Really? No. Everybody should be educated. We're going to make it so simple that everybody will be able to look after their own finances. And that is the world that I'm hoping we're going to get by making this so simple.
And where do you see, I mean, there's a couple of questions here about, what is the future for commercial banks? Is it just going to be banks or fintechs or all sorts of players going to be involved? How will it change things for the banks?
I'm sure you heard about the concept of open banking, which is this ability of transfer data and transfer your account. And you're not going to get married to a bank like our grandparents and parents that once they open an account, they never move, etc., etc. That's going to change. And that's going to be the beauty. If the banks don't adapt, it's the concept of a faster horse or a car. Did they move to the car or did they keep on panting this faster horse? If they stick to the horse, people will move to the car. So it's going to be open competition. This is the internet, this is the internet. There are no walled gardens, free choice. And therefore, the solution for the banks is to become nimble, cheaper, more user-friendly, less, regulations that sometimes don't make any sense. And therefore, what I'm saying is that they will have to compete with CBDCs and every other stablecoin that is going to be issued in the market.
I also would like to add to that, though, that looking at it from a financial stability point of view, that when launching or implementing the CBDC, it needs to be a careful rollout, whether it's through the banks or through the central bank directly, whether it's wallet or tokenized, because there runs a risk of a bank run, which has financial stability risks. Because if the CBDC is issued directly by the central bank, the banks will be emptied. Everyone they'll have nothing. They won't have the money or the base they use to intermediate. And so it needs to be a phased approach. Most people recommend that the central bank issue the CBDC through the banks, and then they compete on services, because now it's not like there has to be deposit insurance and blah, 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 because it's money that's backed by the central bank. But I hear what Monica's saying, that at the same time, they have to then now compete on their service offering and not just try to reach a specific target market and not bother themselves with the poor or the people that are far away or the low income earners. So there needs to be a strategy around how the CBDC will be launched, taking into account the potential financial stability concerns of bank run, liquidity concerns, and so on and so forth. So it's also a balancing act there from the service provision and also the regulatory risks that might come and play. And so that's a very crucial moment, because at the same time, when you launch the CBDC, you don't want to launch it and cancel cash. You want the two to be complementary for a while and then see how it goes. Because, I mean, Switzerland Sweden is a unique case where they just weren't using cash. But other countries, especially in Africa, cash is king. So you'd want to issue a CBDC complementarily with cash. Yeah,
it's a journey, right? What the picture Monica was painted was something that we may see, some years down the line for some countries, and might be more rapid for others. But it's sort of a journey that we're on at the moment, trying to figure out how, what the future looks like, and I think that's it's an exciting journey. Yeah. And sticking with regulatory questions here, there's a couple of questions, one from Mohammed and Kevin, and also Maxine, around, I guess, like, the overseeing and the AML, CFT aspects of it. So, for example, Kevin talks about we've had political instability, within many countries in Africa. And obviously, money laundering and, terrorist funding, etc., is a challenge. So how will central bank digital currency deal with that? Nolwazi, perhaps I'll start with you.
Well, I think on that side, the more and more people that use the CBDC, the more traceable transactions are. Because, I mean, why do people like to use cash when they're conducting illegal activities? Because I give you the 100 grand in a bag, no one can trace what happened to it. No one knows whether I gave you that 100 grand because I just like you and we're friends. So if it's all digital, it's easier to trace and see where that money went. Yeah. Even though maybe if there's privacy, I can't see exactly, like if there's pseudo anonymity or something along those lines, I can't see exactly what it was about, but I can see that there's a grand and it can pick it up as a suspicious transaction much easier. But and so that's where a CBDC can come in with AML CFT. And I saw Rochelle is here. I'm sure she could also speak up and give me more information on that. But it brings about transparency, and that's the key thing. But then that's where the fine line is that I was talking about privacy, where then people may feel like if there's too much transparency, then, I mean, the best example I can give is this proctoring system we had, Examity, for one of our programs, where you had to share your screen, your camera, your microphone, and oh my goodness, I felt like it invaded my privacy so badly. I never wanted to write an exam on Examity ever again. So there's a point, like the central bank must know their limit. So that's how it can come in and help with AML CFT. And the thing is, that's where the central bank needs to remember its primary mandate. Yes, they need to focus on, they have a focus on reducing AML and CFT. And in some countries, there's emphasis on CPF, but that's not one of their mandates. So it can't be something that they're willing to cross the line for.
Yeah, I can add to that. For example, in the Dollar project and the ECB project, they're saying that they're thinking that any transaction below $10,000 or 10,000 euros will not be known by the central bank as to what's going on, to respect the privacy, and therefore allow citizens to transact without having to disclose. But anything about that amount, they will, because of KYC, AML, and all this money laundering. And the technology, what nobody must forget, is that it's programmable. So you can program into the smart contract, whatever level, whatever disclosure. Do you want privacy? You can get. Do you want disclosure? You can get. So that's the beauty of this technology. And for example, in the Bahamas project, the SAN project, what they did is they limit the number of CBDCs that you can hold in your wallet. So in that way, they didn't threaten the commercial banks, and then you still have enough cash to transact between the islands and for commerce and so forth. So they, you know what, that's why I'm saying that the most important thing before you start in this journey is to define what pain points do you want to resolve and what is good for you, for your people. Because remember, this is peer-to-peer. So you here to resolve a problem that affects your citizens. How do you resolve the problem and what are the pain points? That then you embark on the journey of implementing this regional CBDC.
So touching, as you said there nicely, Monica, coming back to the actual consumer. So we know that there's a lot of problems with cross-border transactions. And we know there's a lot of migration that happens, particularly in sub-Saharan Africa, for example, lots of remittance corridors, as we've heard. So how can CBDC work in cross-border when countries are going to have different regulations, different policies? How can that all be managed? That was a great question from Nowroz.
Okay, I've got the answer because we wrote a paper on this. So the paper says, for example, and that can apply for the SADC region or the West Africa region, whatever region. So just imagine all the regions, okay, or each country in every region, they all support one coin. Let's call it the SADC coin. This coin is a stable coin. So it's a coin, it behaves like crypto, meaning it's digital, it's programmable, it's in the blockchain, it's transparent, all the good things in the internet, no mainframe, no Swift message. It's backed by, let's say you back it by the US dollar. So every time I transact between South Africa and Zimbabwe, I don't have to go rand, dollar, correspondent banking. I transact using, in that ecosystem, we use the stable coin. This is what, I don't know if you're aware that JP Morgan was the first bank in the world to create their own stable coin. So they said, we've got branches around the world. Every time we transfer money in the world, we have to go through exchange control and fluctuations and exchange rates and cost. And what if we take all that away and any transaction intra-bank in the different branches in the world uses this stable coin? So imagine that then transactions become real time. It's like sending an email. All the complexity eliminated. So that's what I recommended to the SADC group of central banks, that they create this stable coin and they use the stable coin to transact in all these central banks. And then eventually I'm hoping that the same stable coin will be used in the African Union. So that simplifies the commerce in the region. And then hopefully that stable coin hopefully will interoperate with the various central bank digital currencies, and it interoperates with any other stable coin and other central bank digital currencies that are being created. Remember, once again, it's the internet. So there's no reason why these technologies should not use standards that are, like if you use the Ethereum standard, then all your coins can be exchangeable electronically in a simple app with your little finger. Yeah.
I love how you make it seem, you explain it and it seems such a simple concept.
I promise you, it is so simple. And you know what, we even offer at Consensus because we realize that the only way to learn this technology is by doing. So what we offer you is a sandbox. What is a sandbox? Is a protected little environment in the internet where you can practice and play with it, you know, and we give you the access to the internet, and you can create, you transfer, you pay, you build whatever CBDC or coins you want to invent in a safe environment, and we train you. And then after a while, you realize, like someone asked the question, how much technology do I need to understand? And I give you a simple comment that I always make in my lectures. I always say, did you know that the technology of the internet is called TCP/IP? And people go, no. And I said, can you send an email? Yes. I said, well, who cares how they build the internet? You know, I don't care about TCP/IP. I know that I can use the internet. The same here. I'm not going to teach you about blockchain and all the techie stuff. I'm going to teach you how to use it. And then you don't need to be a techie. You just need to know, you know, how to achieve the resolution to the pain points that you have.
Such a fascinating way of looking at it. You know, actually, like pretty much we're in a world where tech can do almost anything, right?
Anything.
So why use that as your stumbling block? Actually, look at the problems, the main problems that you have in your country right now, and what you would like to solve. And it's about thinking about, you know, how can you use, because sort of one of the questions, you know, that I have seen coming in from, just going to scroll down to Mbina, and also was something that I'd had that I was going to ask you, but you've talked so well on it, but I'd love to hear more. But is, you know, this idea is, you know, do you have to have a smartphone and do you have to have internet? Because we know there are many people living in rural areas or are, you know, of certain ages that would perhaps struggle with things like opening, you know, a digital wallet, having an app and transacting. But you sort of started to tell us that actually we can use the technology to reach the masses in rural areas, those who don't have high levels of digital literacy, you know, just, I mean, tell us, give us some more examples. Like, I'd love to hear more about that financial inclusion angle.
Yeah, well, already we can see many technologies using QR code. We have something in South Africa called Snapchat. It's amazing. I just need to take my cell phone with me, and then I can do every transaction. I don't need any more credit cards or cash or ATMs or banks. It's amazing, and that is the future. So yeah, yeah. So it's a new reality, and as I said, the machines that uses the biometrics. That also, you just need your fingers. Amazing. And then someone asked the question, how is it going to interact with the M-Pesas of this world? Just remember, M-Pesa, very important. It's a telecommunications money. So the telcos created this money. So the liabilities on the telcos balance sheet. So clearly, we would want the telcos to be part of this, but by giving you a CBDC, you want something stronger in terms of risk management.
Just to sort of begin to wrap up the session, but we've got a great question here from Aurea that's come in. How do you see CBDC in supporting the investment for the realization of the SDGs in Africa? And what role are people like the UN or funders and donors, what in the space, should they be helping get in on central bank digital currency? Monica, maybe I'll put that, or Nolwazi, I don't know which one of you wants to go first on that one.
I can go on that one. So I think CBDCs it's the first SDG of no poverty that CBDCs already start answering, because CBDCs bring in the whole community, or if you're looking at a jurisdiction, into the financial system. And what do you know? Once you bring people into the financial system, you can start building their credit record. You've seen multiple different and creative ways how people have built a credit rating system, from looking at how people use their airtime, or in some countries like Eswatini, where I'm from, where you can borrow airtime and pay it back, and they can track your credit rate record like that. And so once you can bring those people into the financial system, they can learn how to better themselves and get themselves out of poverty through even the micro loans that help them start a small business and learn how to take care of themselves while they're getting the financial literacy or training to avoid the problem that they saw in Kenya with the digital credit, where now there was over indebtedness. So I think a CBDC starts there before even answering other questions, other SDGs, that people are uplifted out of poverty, because the current situation, or the current financial system that we have, has left 1.7 billion people out of the financial system, out of services that could better their lives. I mean, we have been so used to the financial system, you take it for granted that someone can withdraw an e-wallet. And then when I sent someone, was it instant cash on Standard Bank, and they called me asking for the steps, it just didn't make sense. I was like, but it's so easy. I think that's from just the first SDG. So, and I think that's where funders or the UN can come in the sense that financial education from financial literacy, digital literacy, or even because if the CBDC is designed properly to work offline, online, as well as on smartphones or non-smartphones or feature phones, like on an app or USSD codes, these people can be uplifted out of the situations that they're in and get out of poverty and make something of themselves. So I really think there's a lot of potential in CBDCs designed well for a specific jurisdiction, because one thing I always like emphasizing is that you can't copy and paste. Like the Bahamas launched their cent dollar. Can't copy and paste what the Bahamas did. They've got an island thing. So for them, it's perfect because cash reticulation was expensive. The CBDC actually made sense. But if you're a country like Monica's been working a lot in South Africa, you can't copy what they did in the Bahamas and South Africa. South Africa is one country. There's not like islands everywhere. The design choices made in the Bahamas will not work here. So a well-designed CBDC for the country's context will help the people and uplift them out of poverty. Thank you.
100% Nolwazi, I totally agree with you. And the final thing I just want to tell you, this is just the beginning. I have to give one simple example. I'm old enough to remember when the internet started. And I can assure you, at that time, if someone one day had told me that one day there would be an app called WhatsApp, that I was going to press a button and speak to anybody in the world for free, I would have said, nah, you're dreaming. Because phone calls were very expensive and it was terrible how complicated it was to make a phone call home. And this is what I have to tell you, because this is going to apply to everybody. Everybody will have a chance. It's open source, it's decentralized, it's the internet, it's cheap, it's going to be easy. And it's the 20-year-olds that are going to come up with the most innovative ways to use this. And we haven't even begun to tell you about all the decentralized finance products that are being created in the world. So just add the money being reinvented with all the financial instruments being reinvented. And one simple example, fractional ownership of property. Property is very expensive, but imagine if you could buy a fraction of a property and therefore enjoy into the benefits of the increasing capital appreciation of property, which it wasn't possible for the majority of the people in the world. That's going to change. You're going to even own 1% of the Burj Khalifa in Dubai or the Mona Lisa in the Louvre. So what I'm saying to you, this is just the very beginning and it's a wonderful journey. So don't be scared, just embrace it and actually learn about it, because it's wonderful how the world is going to change. Thank you.
Thank you so much, Monica, and also Nolwazi. You've painted a really interesting picture of the new world that we are moving into and why it's important to go there. And one final question, which is a very quick one for you to answer, Monica, is there was one question from Marsuri is, are there people out there to help lead central banks make a transition?
Of course, that's my job. Call me. That's what I do. A little advert. Yes, for me.
we don't like doing a sales tactic, obviously.
No, it's not about selling, but you asked me the question.
Perfect. Perfect segue to say yes, Monica is one of those people, and yeah, we hope that you will reach out and contact her. We will, with the recording that we're going to send out of today's session, we'll also put Monica's contact details in there. And I know a couple of people asked for sort of some links to some more papers or reading. So Nolwazi and I will put our heads together and also maybe share a few other things that you can read and catch up information on. So we hope you've really enjoyed the session. I can't believe the hour has disappeared. It just felt like it just got started. Monica and Nolwazi, thank you so much for joining me today. It's been really, really interesting, and I hope the start of more conversations on this topic, I think, you know, will definitely be needed as time goes on.
Well, thank you for the opportunity. Thank you. Nolwazi, you're always great. I love that.
It's great to see you, Monica. Thank you, Sarah, and thank you to everyone who attended our webinar today.
Absolutely. Thanks, everyone, and see you all at a webinar soon.
Yes, thank you. Bye.